if there was a minimum net worth that was required to trade options or futures or intraday, I wouldn't have been able to start my career. India is a poor country, as in you can't just leave out a large audience just because we think it's not the right product. The thing is, if a person is having a side portfolio, that is not where he'll have the largest outcome in life, right? His outcome will come from where he's giving most of his time to, which is his work, a profession, a job, a business, or whatever. That side portfolio is a good way to give him return on whatever he's making out of his main trade.
A diamond is forever.
Scam. And the biggest fraud out there. So.
A gold is forever.
Maybe.
Hello everyone, welcome to Arth Niti. I'm Shekhar Tomar. We are thrilled to have Nithin Kamath with us today. Nithin is the founder and CEO of Zerodha, a firm that revolutionized stock trading in India and made it accessible to a lot of people. Nithin, with his key insights about finance and psychology, has built a very successful enterprise and has also motivated a lot of future traders and investors. So we are very happy to have you here, Nithin. Thank you for your time. Welcome to Arth Niti.
No, thanks, Shekhar, for having me here.
So I think you started your journey in the finance field for almost, I guess, more than 20 years now.
Right.
And you started as a day trader. And I think it's the most difficult place to make money.
Right.
Like, is it more difficult now or has it always been difficult?
No, day trading is, it's probably the toughest place on the planet to make easy money. It gives you an illusion that it's easy. But I think the only easy thing about day trading is opening an account. Because, but otherwise it's law of the jungle. Because day trading is a zero-sum game, right? So what it essentially means is you're competing with everyone else, right? So while on one side it might be a retail investor, but he has to understand that on the other side it could be some PhD in math, with access to unlimited money and computation power. So it's hard. It's really hard making money day trading.
So is it hard even if there is a momentum and let's say the overall stock is going up, even then it's a zero-sum game, or sometimes it can be?
No, there are two things, right? As in a day trader is in a trade for a few minutes, right? I mean, as an investor, you could be a short-term investor. So all of us decide to buy a stock, the stock goes up, we all make money, right? But in day trading, you're in it for 3 to 5 minutes or 10 minutes, right? As in, so I'm buying, you're selling, I'm buying. So there's always a counter. There is no net everyone making money. In day trading, if someone's making, someone's losing, right? As in, and also what it makes harder is that in all of this, every time you trade, you lose money in terms of brokerage costs, you lose money in terms of transaction charges, in terms of the government taxes, etc. So it's like almost, if someone's playing poker, it's like a rake, in the sense. Every hand, the little bit of money keeps going away. So it makes it even more harder because
But is it similar to poker? Because I guess over there the numbers are something like 5 to 10% of the poker players actually make money.
Right.
And I guess it's the same number over here.
No, that 5 to 10% is, it depends on what time period you look at.
Yeah, I'm saying over a very long run, if you keep playing poker.
I would say it'll be much lesser than 5 to 10% in poker as well, right?
Yeah.
Because I've been playing poker for a long period of time, and less than 1% stick. See, if someone's making money.
When did you start playing poker?
I mean, trading, poker, business, the kind of skills you require, I think, very similar.
We are very similar.
So all the interests have been developing together of sorts for many years. But poker is more fun, in the sense that it's a good way to socialize. But every time I'm traveling and I get an opportunity, I go sit on a table and, it's just to test myself, in the sense, am I still sharp enough to be playing and etc.
So I'm digressing here, but I know a guy who was he made very well of himself in poker, but he was playing for 12 hours a day.
Right. Yeah.
Or something like that. It's only after that this enough number of trades or enough number of games happened that he could make anything out of it.
No, it's hard. The thing about trading and poker, etc., is that actually, even in business, is I think if you make money the wrong way, right, it doesn't stick, right? And the thing is, with all of these three things, you can potentially make money the wrong way as well, right? So if you don't have the right process in place, I'll give you an example. So when I was a sub broker in 2008-9, we had a customer who who bought deep out of the money call options in 2009 when elections were happening, right? Some 2 lakh rupees became 2 crore in a day, right?
Wow.
And now you'd assume that he had a large outcome, right? He lost it all in 1 year, and he lost it all and some more, right? Because the person who goes all in on an uncertain event, that's making money the wrong way. And even if you made money the wrong way that way, it'll not stick. And you've seen this in business as well, right? As in, people who suddenly got unlucky to build a business in a certain way, then losing it all because the way they built the business itself was wrong, right? That's why I keep saying it's harder to make money trading than buying
Day trading.
Day trading,
Even
than day trading or doing active futures and options trading. It's easier to actually make money buying lottery tickets than.
So by the way, people have done studies even on lottery wins, and people go back to where they were within a year or
Correct.
so.
But the odds there are much higher that you are not going back, right? Because say assuming you put 1 lakh rupees and you had a lottery of, or say 2 lakh rupees and you had a 2 crore lottery. It's unlikely that you're going to use all the 2 crores and buy lottery out of it. You'll probably use some of it, buy a house, you'll probably go buy a car or whatever, right? But traders, you're going to bring that money back because you want to make the 2 crore more. Now, that's really what gets you to start trading, right? I mean, trading, one aspect of trading is about making money. But the second aspect is a thrill, right? It's the dopamine hit that you get out of doing it. And it's very addictive. And so I think I usually, I don't know if I should be saying this as a broker, but I keep talking about it, that the biggest rule of trading has to be, is to know when to stop trading. Right? Because trading is a high skill game. It's like playing music for a living or playing a sport for a living, right? And not every person who picked up a cricket bat became Sachin Tendulkar, right? As in, you need to have had the skills. Even if you decide to practice, 20 hours a day, if you don't have the genetic lottery of sorts, it's you can't change yourself.
So is it really this genetic lottery, or there are some skills? I've heard you say that your brother Nikhil is very proficient at trading, and at some point you asked him to continue with that while you took the other part of the business. So is it because he know optimally when to stop, or he know to use the information better, or it's a mix of all these?
No, I think, the thing is, it's like, I don't think there's a cut, copy, paste, in the sense there is no one perfect trader, in the sense who's got all these skills, right? I think it's just people who have figured how to be as rational as possible when induced to volatility, right? Because, the thing about trading is it's like being on a roller coaster, right? You'll have ups and downs. One, can you remain rational in those points, right? And that is, I think, comes out of genes and experience as well, right? As in, you should have experienced some of this. Like, people who get very excited when they make money, they're going to get very disappointed when they lose money, right? And if you have that volatility, it's very hard for you to survive trading for a long period of time. And if someone starts trading, it's unlikely that you're going to make money in 3 months, 6 months, 1 year, right? It's like, think of it as you have to play T20 every day for 20 years of your life. Of course, it's exciting to play T20 1 day, 2 day, 3 days. But can you actually survive 20 years of life playing like a high intense cricket game every day? Most cricketers wouldn't, right?
So if you have to think of the win-loss percentage, it would be what? You win 55 and lose 45,
the good ones,
good
ones are that, I think, if I were to think about trading, I think one of the mistakes a lot of retail traders do is not bet size, right? Which is, they're constantly trading with the same amount of money, right? Trading is about, 99% of the time sitting and trading small amounts. And
1%.
Yeah, so the fact that, so even, that your odds of being right is 50 to 60% if you're a good trader. But in that 10% delta when you're right, you need to be making more. So
this is like this 80-20 rule that maybe your 20% of the trades would make you,
of course,
a significant part of it.
It's and the problem is if you're not doing that and you're constantly keeping betting at the same thing, even if you're right 60% of the times, you'll net be down, because I told you there are trading costs, there are impact costs, there are charges, all of this to worry about.
But it's a double-edged sword, right? If you are wrong at that time and you think you are right, you're also going to lose.
No, of course. See, the thing is, there is no going all in trading. I don't think it's a smart idea, because then you are subjecting yourself to a lot of emotional volatility, and if that is a strategy, you will keep subjecting for long periods of time, you'll burn out. It's a high intense, high stress game. So no, I'm saying the way if I were to today tell a person who's starting off trading, I mean, a good rule would be 90% of the trades take maybe 1 to 5% of the whatever is the capital on the trade. The remaining 10 to 20% of the trade, maybe 5 to 25% of your capital. So it's never 100% of your capital, right?
Okay.
It's never that, especially for someone who's doing very active trading, which is day trades or futures and options trading. But yeah, it's otherwise it's really hard, if you're not taking larger bets every once in a while, it's really hard. I mean, it comes back to poker.
Then you'll
again.
go back to the mean again, and basically where you started.
Yeah, like in poker, right? As in you keep putting your blinds, right? You keep seeing the flop. Every once in a while, you get a good hand. At that time, you say, what, I'm going to play a conservative.
It won't work.
It won't work. It doesn't happen. So even in business, it's the same thing, right? I mean, as a business, every day I'm taking, like I think about everything I do at Zerodha as a betting frequency, as in, how frequently am I attempting new things? How frequently is the business taking up newer initiatives? Because if you're not doing it, that means you're not even in the game, right?
Yeah.
And so you need to keep improving, keep doing something different all the time. And every once in a while, you'll find this one thing that seems to be clicking, and you have to double down on it, right? As in, it's. I think it's really. I think you can probably extrapolate it to all walks of life, and it'll probably so.
It's really about risk taking, but how has your thinking about risk changed over the years?
No, I mean, I was quite dumb when I started, so I've blown up twice, and so I've
blown up means what?
Blown up as in I borrowed money, lost it, borrowed from the wrong kind of people, so had to kind of find different kind of jobs to make good of the money borrowed, and so I think 2000. My toughest times in my life was probably 2001 to 2004, 5. But I think that, I mean, after coming through it, I think in my mind the framework is really to figure the risk before doing anything, right? Like figuring out the worst case outcome even before you do anything. It's just not about trading. It's about business. It's about almost every walk of life. And what I've realized is, at least with me, if I know the worst case outcome, I'm more rational when things don't go as planned. Right? Otherwise, if you go in feeling very optimistic about everything, if something suddenly bad happens, you panic, you can react, you can be irrational, and I think when I think about generally, I have so many people who run businesses, etc. I think looking across, I think the ones who have done well are the people who found a way to remain rational when volatility hit them. Right, and people who are not that haven't really done well as a if I were to look at my friends as a group. So it's just not me. Different people do it in different ways, but the way I think about it is just to define the worst case outcome before everything, and that's my max risk, right?
But have you become better at identifying risk over a period of time?
Of course, yeah, and like everything, if I'm doing this right now, I would have thought about what's the max risk out of this, right? And it's become like a framework now. And the problem with this is you tend to, like my wife keeps talking about it, that I've become maybe a little less emotional, because I'm always constantly, with everything I'm just defining, is this a max? Because maybe in personal relationships, etc., you need to be rational at some times, right? Because if all times, you're behaving like this robot, who's got everything sorted, right? It doesn't. But yeah, no, I think it's definitely helped me professionally for sure, in terms of just that framework has been significantly helpful.
And how does it translate to? I mean, generally, I've seen sometimes you're given advice about diversification.
Right.
And so if someone is starting out trading,
right,
how should they think about this question?
Yeah. See, the thing is, I think it's okay. So the first thing I would say, right, is that when people think about trading, most people think of trading as trading stocks. I've said this many times. I think it's trading time, right? It's about trading your time to do what can have the maximum outcome for the effort input. If that's trading stocks, you go trade stocks, right? If I'm skilled football player, I should be putting the time trying to be a good football player. If I'm a musician, I should be doing that. So trading isn't just about day trading and trading stocks. I mean, now, so I think the real, I have an 8-year-old son, and my challenge with him is to figure out what that trade that he enjoys, right? Which means that you have to go attempt a bunch of things to figure what is that you really like, enjoy, etc. Right? And so I think the first thing is that if you figure what is that you enjoy and you're going to spend a lot of time, your chances of having a good outcome is better, right? Versus trying to put time in something that you don't care about, right? If I've done all right in life, it's because I got lucky to pick up a trade that I'm probably decent at and which I enjoy.
But that's not diversification. You are going all in, and I guess most of us do that, at least with careers.
Correct. Yeah. So which is what I was trying to get to, as in, if you're not trading it, if you're not really thinking of this as trading your time, right? And where you've spent some time to identify what you're good at, and you're doing it just to figure stuff out. I think at that time it's a good idea to diversify. Right now, for my son, I'm trying to get him to attempt 5-6 different things, right?
Okay.
To let him figure what is that he likes to, right? A portfolio of stocks is exactly like that, right? As in, you can't figure what stock will do well, right? As in, it's almost impossible. If someone's claiming that they know which company will do well, they're bullshitting. I mean, it's like, it's impossible for someone to call that. Right? I've done this for 25 years. If you were to ask me, Nithin, tell me one company that will do well, I'll say, I don't know any, right? As in, and so if someone is getting into trading stocks, right? As in building a portfolio, etc., then I think, diversification is a good idea, right? But if it is, what do you call? It works okay as long as it's not the only thing that you're doing. Because, like say I have a job and by the side I'm having a stock portfolio, that has to be diversified. That cannot be concentrated, right? But my job is my trade actually, right? Because that's where I'm giving most of my time. So I'm saying what I was trying to get to earlier was that trading I don't think people should look at trading as only trading stocks. I think the framework should be that it's a time that you're giving, and you should be giving time to wherever you think you can have a larger outcome for the time and effort you're putting. Yeah, but coming back to stocks, people who come to Zerodha, I usually say that maybe the first stepping stone, the right stepping stone for most Indians is maybe not even stocks, it's maybe fixed income.
FD.
Not even FD. I mean, I'm saying not FD. I'm talking something which is between FD and stocks. Lower risk than stocks, but higher return than FD. So maybe corporate bonds, something like that. Like something 2-3% more than whatever.
But I think you said a very interesting point over here. When you bring in this view that everything is a trade, going for a job. Right. If you are trading and not completing your education properly, then probably you're harming yourself in some sense.
Right.
So it kind of builds on that. Sorry, I was just digressing, but I think it kind of fits in that entire architecture of think about diversification.
Correct. Yeah. No, but you're also right, as in which is what you're trying to allude to, I guess, is to say that if you're not concentrated, how can you have large outcomes in life?
Yes.
Right. It is. I mean, the thing is, if a person is having a side portfolio, that is not where he'll have the largest outcome in life. Yeah. Right? His outcome will come from where he's giving most of his time to, which is his work, a profession, a job, a business, or whatever. That side portfolio is a good way to give him return on whatever he's making out of his main trade. Right? And that has to be diversified because that's not his only thing. Now, if there is a person whose only job is to sit and trade, then it's okay for him to be concentrated into a single stock because he's not doing anything else, because he's sitting and just doing that only thing. Like Zerodha is my concentrated trade. My personal portfolio is still a diversified bunch of stocks, but I don't think of that as a trade. I think of what I do at Zerodha as a trade. So, right, and So, but to have really large outcomes, at least with people, whoever I've known, you need to take concentrated bets. right? As in,
So this brings to, I mean, I wanted to bring Charlie Munger today as well, and I guess he just passed away, so he was a great investor, and you read him quite a bit.
right,
And both him and Buffet have always talked about taking concentrated bets.
right,
While the entire finance that we teach at ISB is about diversification.
right.
But you're saying both point of view can be synthesized together.
Okay.
They are trading full-time,
Right.
that's their only activity, so there it makes sense.
Right.
But for someone who is not an active trader, but doing a daytime job, for them probably diversification
Yeah,
is the
I mean,
optimum.
the thing is, Munger and Buffet are the only job is to invest, right? So they can take concentrated bets on stocks, right? Because that's their primary profession. I mean, that they're what they're doing itself is a living, you know. So, but someone who's got a job and he's going to say, I'm going to take a concentrated bet by the side in a investment, it doesn't add up. You know, it's just a high risk. You know, maybe you can do it early in life, but you know, as you grow older, you know, responsibilities go up. It'll be very hard to kind of stick through that kind of a portfolio building. I think most people should look at their investment portfolio or trading portfolio as, you know, a place where, you know, whatever financial outcomes they're having other ways, you know, has a more optimal returns of sorts, and not really look at it as a primary source of trying to generate income, you know. So.
And I guess people get less risky as these family responsibilities grow over a period of time.
Yeah, absolutely. As in, it becomes harder over time. You know, like this is something I keep thinking. If I started Zerodha when I was 40, could I have started Zerodha at 40? Unlikely. You know, so it's just, you know, it's just the kind of risk that we have taken in life. You know, when you're younger, it's unlikely that I would have been able to take once I was married or once we had a kid, etc. You know, so.
What's the biggest risk you took?
I mean, Zerodha itself. You know, I mean, in the sense.
I mean, it panned out, yeah. So
right.
Exposed, it looks.
It now. I mean, like I said, see, the thing
you can
is,
rationalize it.
Yeah, but back in the day, you know, we started Zerodha at one of the worst times for broking industry historically, because 2010 was really the worst times for broking as an industry. And a lot of people said it's foolish to be thinking about starting a business at bad times. In hindsight, it's the smartest thing that we've done. But back then, it was borderline foolish, you know. So, and to be taking that kind of risk, and but yeah, it played out. So now it looks, you know, very smart. But
by the way, we have a lot of finance research and econ research which says that best companies come during recessions.
Yeah, you know,
you make the bet during recessions and it's likely to come out.
No, I mean, I've seen it play out as well, right? Yeah. Because we started in 2010. The first real competitor who even acknowledged us was maybe 2016, right? It means it took 5-6 years for someone, and the reason was because it was a bear, you know, like a phase where the market wasn't really growing. If it was like a bull market like right now, you know, if we had started now, you know, in 10 days there would have been another broker saying, you know what, oh, this is, you know, like he's getting customers, let me do this very quickly. Timing is, I think, is everything to life, you know. You know, like a lot of outcomes in life is about, you know, being at the right place, right time, you know.
And so one thing, and I guess I'm like completely going diagonally opposite to what you are talking right now, that you talk about timing quite a bit.
Right.
And if I can quote like specifically from one of your posts, you said that we believe that most successful businesses were those lucky enough to be in the right place at the right time, with products and initiatives suited to the market demands of that era. I think you are the most generous in some sense.
No, I mean, if someone's saying otherwise, they're, I don't know, smoking what? You know, so, no, because I know a lot of businessmen today. And of course, see, the thing is, you know, like usually when I say something like this, right, as in luck is so important. So I usually also have, like, you know, like youngsters today, they come and ask, you know, how can you say this? You know, how can you say luck is important? You know, isn't it hard work, etc.? But I say it's not, because it's timing is everything to life. And I say, and I usually share this framework around saying, this is how I think about luck, is that your odds of getting lucky increases the longer you survive.
In the market.
Doing whatever, right? I mean, because see, the thing is, Zerodha, I mean, I started trading in 97, 98. Zerodha financially, etc., you know, started doing well only in 2016, 17. So in my head, I think it took 20 years for me to get lucky, right?
No, so that's when the market realized you're lucky. But in your head, when did you feel that, okay, this is something it's...
No, I mean, I was enjoying the journey. Otherwise, I wouldn't have. See, the other thing is, how do you survive long enough to get lucky is that you do something that you like love to do. right? If I was not doing broking and I was doing, I don't know, some pharma distribution, would I have survived 20 years trying, and gotten lucky? Maybe not, right? Because I would have probably gotten frustrated and dropped off, right? So the second thing about luck is that one is you need to survive long enough. But to survive long enough, you should be doing something that you enjoy, right? Because then, your odds of surviving long enough kind of increases. And then I think, and it's a little cliched, but I also kind of realized that the more people want you to get lucky, the higher the odds of you getting lucky, right? That means, if just being a decent human being is underrated, right? As in, just because business schools and movies, they've all turned out this, and they made this.
Don't say anything bad about ISB.
not just ISB, but I think every business school, this whole thing that you need to be cutthroat, you need to, do whatever, to prioritize business over everything else, right? As in, just optimize hell out of every single thing.
But if you're not Sadhguru and you go and say on Twitter that, hustle is not important, it would come to you.
No, hustle is important. Hustle is absolutely important. Every day is a hustle as a businessman, but...
luck is also important.
Being, I'm saying, my thing here was that just being a decent person, right? Saying, trying to do good for your customer, trying to do good for your team, etc., right? Isn't taught anywhere.
Of course.
Right? Because, it's always do what is right for the business. And the problem is every time you think about doing right for the business as an economic outcome, I can tell you that every single decision, if I prioritize for the customer, for the business, which is how much the decision makes max revenue for the company, it's inversely related to how good it is for my customer. I can't think of too many things that I can do.
We economists can rationalize almost everything. So like retaining customers over a long period of time, then probably what you are doing is rational in the long run.
Right.
But in the short run, maybe that's
Correct.
never rational.
Yeah, it's not. But that's like I said, the thing about Zerodha that I'm most excited about is the fact that we haven't spent a single rupee on marketing and advertisement till date, right? And the only reason that has happened is because our customers have wanted us to do well, right?
Yeah.
And the reason they wanted us to do well is because we've been behaving decently with them, right? As in,
yeah.
It's, in the sense we have, the way at Zerodha, the way we think about the customer is that we will never do anything to the customer that we will not want done to us, right? I hate spam emails, I hate spam push notifications. So I'm like, would I ever do that to my customer? I won't. Right? Of course, it means short-term loss in revenue, but that's, this is important for us, right? As in, like I said, but that framework has helped us get lucky, right? The fact that, we didn't have to... See, the thing is, in most consumer businesses in the country, the biggest cost is your cost of acquisition, right? People spend between, in our industry, between 2,000 to 3,000 rupees acquiring a customer. If you spend 2,000 to 3,000 and acquiring a customer and the customer comes to you, you now need to figure ways to earn that money back from the customer, right? And you will potentially push, upsell, missell, whatever, right? As in all of those chances. For us, the sweet spot is that, as in we charge 200 rupees on account opening. So our CAC is a negative 200 rupees. We actually make $200 on every customer. So when a customer comes to us, there is no, I need to get him to transact.
I almost get no emails from you.
Yeah, other than the whatever mandatory, regulatory emails, we don't. Every once in a while, I might have a business updates, but you would have never received anything saying buy this or sell this, right? I know that if I send one buy this or sell this, we'll probably do a bunch of revenue, but is there an advice I can give to all our customers which will right way all our customers? No, right? Because it's impossible. If some platform is sending a push notification to all the customers whose risk profiles are so different, it's like a doctor sending everyone saying buy paracetamol without knowing who needs what, right? As in, so it's not, we believe it's not right. And the reason I talk about this, especially in a platform like this where there are probably a lot of future entrepreneurs listening, so is this is this whole doing right by the customer. While everyone says it, very few actually do it, right? And if you do it and you can do it for long periods of time, I think you can build a decent brand moat. And and I think we are a decent example of that.
Yeah, I guess you can already test it by knowing the number of spams that businesses send or automatic yes.
Right. It's not even that. It's just, so at Zerodha, right, not a single person has a sales target or a revenue target, right? Because I know as soon as you put a target, people will try to optimize for it, right? As in,
Yeah.
right? And in our industry especially, if you give target to people, it potentially always leads to some kind of a missell, right? And so we've taken a stance that we will not do it. It like I said, these are different ways of looking at things. But what I'm trying to hint here is the way businesses have been taught to work well and operate and get big. That is what has worked in the past, right? But today's generation is very different. They are more self-aware. They're more connected. If something's not right, the word spreads, and something's good, the word spreads too, right? So maybe it's like a decent time to be thinking about building businesses differently, and yeah. So just throwing it out there.
So talking about today's generation and thinking again from how the financial landscape has changed.
Right.
I guess you followed the GameStop saga in the
Right.
US. What was your key takeaway from there? How social media is coming together with Fintech in some sense?
Yeah, I mean, see, the first thing, I think our markets are infinitely better than the US markets. It's just a market infrastructure-wise.
So you're saying something parallel would not happen in India at all?
No. And if you're a customer of a retail broker in the US, if you go park the funds lie with the broker platform forever. So they almost act like a bank. Right?
Okay.
Second, if you buy stocks, by default, most retail brokers in the US have this open a margin account for you. The stock sits in their account, with your street name of sorts, in the sense they can potentially lend that stock to others as well, right? And so in India, you transfer money to us. If you don't use it, it comes back to your bank account.
Yeah, there's some threshold that it has to
30
go back.
days. Once in 30 days, it goes back.
Yeah.
When you buy a stock, it goes to your demat account. Where we have no access. Of course, you have a demat account through us, but you have it in NSDL or CDSL. But we have nothing to do with it. In the sense, even if we go down, the stock lies with you in your demat account, right? So one of the reasons for the GameStop issue was really how much it got shorted, right? That means the stocks which are lying with the brokers, they lent it to people who wanted to short it, right? And in India, lending can only happen if you authorize. And that too, you have to do it yourself. In the sense, there is a stock lending and borrowing mechanism in the country, but still very early days for it, not very active. The reason GameStop happened was because of that. It was a short squeeze, like a lot of short sellers in the market, and then someone figured that there are so many short sellers, and they couldn't buy back the stock, and the stock bounced up. So something like that can't happen in India, just given the market infrastructure in this country.
So on the technical side of it, it can't happen, but these kind of social media groups coming together, that's everywhere.
I mean, that's everywhere. I mean, Telegram groups, WhatsApp groups, influencers on YouTube, trying to peddle stuff.
But is there an optimal way of thinking of regulation around it? Because let me ask the question first: are we over-regulated, or in some sense, it's a optimal mix right now?
See, the thing is, I'm conflicted here.
You don't have to answer this one.
No. I mean, I would feel we are overly regulated, given the breadth of market intermediaries in this country, the fact that there are 1,000+ retail brokers. Your rules are not meant only for the top 10 or top 20, right? Your rules are really meant for the entire basket of 1,000. So a few rotten apples can really spoil it for everyone else, right? So in that sense, I don't know what I could have done. Like, if I was on the regulator's shoes today, maybe I will also come up with more rules because I want to protect the markets, right? And if I want to protect such across such diverse and different types of intermediaries, probably over-regulation is the only way to do it. But what the regulators in India have done is phenomenal, though. As in, take 2020 for example. As in, we had no incident, not a single default. Right, nothing. There was absolutely nothing that happened. Like in the US, everything was broken. I mean, like platforms were down, settlements not happening. All of that was happening, and we had almost nothing. Right, almost no incident as such. So those regulations are helping in some way, right?
But when do you say it's too much versus too little? It's like you were talking about your kid. So you don't let them go and play
Right.
outside.
Correct. Yeah, that's really.
That's keeping them safe.
Yeah,
Are
because
we at that level, or it's?
So the thing of the regulator's mandate in the country is also for capital formation, right? It's not just regulation; it's also market development and capital formation, right? So and in that market development and capital formation, you need to allow some room for innovation, right? Otherwise, if everything has to be, regulations that way can kind of stifle innovation of sorts. So yeah, I don't know what's the right answer to this. What's the right level of leniency you had to offer?
But for example, you can't go and read Telegram channels and even WhatsApp groups. How do you regulate it? It's also a tough problem from a regulation perspective.
I mean, that's a really hard. What's happening through the social media today. Finfluencers, and I mean, a lot of influencers are doing good job, but there is that again, like this whole bunch of people that try to peddle, how you can quickly make money in the markets, sell a trading course, sell stock tips, etc. Right? As in, that shouldn't happen. And I think if you actually look at SEBI, they've taken a bunch of really, tough action against some of them recently.
I mean, they came up with a white paper, and I guess we'll know.
No, the white paper is one thing, but they've been taking action by the side.
By the side, okay.
Like I think 3 really popular influencers who are not following the rules. They've taken strict action against them, and their action taking against them actually has reduced the activity in that space significantly, right? Especially on platforms like YouTube, etc. Now, Telegram, etc. is a rabbit hole. In the sense, it's very hard to even figure who is that person running the Telegram group, right? As in, and there are groups with lakhs of people on it without knowing who's running it, right? How do you actually regulate it? It's really hard. So what we've done at Zerodha is, every time we figure there is some stock being peddled, right? And typically these stocks that are peddled are penny stocks, have no fundamentals. There is, a lot of times there are small little shops with no business as well, right? And so we have this initiative called Nudge. So it's like a user experience on top of a trading app. So every time someone's buying a stock where we think there is a little bit of this activity happening, fraudulent activity, we actually actively nudge the customer saying, do you know this is happening? Maybe it's not a good idea to be buying this stock. So we almost...
This all you have done on your end. There's no SEBI regulation.
So after us doing it, now SEBI has set a mandate.
Okay.
So exchanges has a category of stocks where every time they figure that there's a lot of manipulation happening, they move the stocks to this category. So now exchanges have mandated all brokers to alert the user. But we've been running this for 3 years. So and our thing extends beyond this, just the framework of what exchanges have asked us to do. And the idea with nudges that we have is to go beyond just penny stocks and manipulative stocks. So our idea here is to figure ways to get customers to do lesser money mistakes, right? And because I think like a lot of people come to me and ask, how do we make money in the market? And my answer usually is, there is no right way to make money in the market. The right way is to avoid as much money mistakes as you can, which is diversify, don't go against the trend, don't buy penny stocks, right? If you're taking riskier bets, do it with smaller bets, right? As in bet sizing. So we're trying to incorporate all of these as rules and put it right on top of the trading app. So it feels like it's a part of the trading experience itself. So, for example, if someone wants to buy an iPhone and say this person's making 25,000 rupees salary. So here's a loan for 2 lakh rupees, right? And 50% or whatever. Ideally, if the platform's doing what is right for the customer, they should say, what are you smoking? Don't buy this.
Yeah, that you're less likely to pay it back. Think about it.
I mean, you should maybe go buy a 25,000 rupee phone, right? I mean,
Yeah.
a guy making 25,000 rupee phone a month shouldn't probably be buying a 2 lakh rupee phone. So our nudge platform essentially works like that. Is that, when we figure someone's trading too much, we want to tell him, dude, what are you doing? Take a break, right? So we're hoping, using this, we can help our customers to make lesser money mistakes. Is this all altruistic? Not really, right? Because
I mean, you also want them to stick. I guess people who make
Absolutely.
mistakes, they drop off.
Yeah, because if people don't do well, trading, they will. Like I said, I think the framework is is to always optimize for what is right for the long run over what is right for the short term, right? Because if I was optimizing what is right for the short term, we would want this guy to generate as much trades as quickly as possible, right? But which is how a lot of people, because if you're on a 3 month, 6 months target, you will always optimize for that 3 month, 6 month target, right? But ideally, you want that customer to be your active customer for as long as you want, because every one customer who's active and happy, he's going to probably introduce 20 customers through his life, right? So now you don't just lose your one customer, you probably are losing 20 customers, right? So it's almost, like the way we think about it at Zerodha, we talk about this internally quite a bit, is that I think our biggest priority, the reason we exist as Zerodha is to help our customers do better with the money. Right? The reasons have evolved over time, but the way we think about it, Zerodha, is that, what is the point of everything if our customers don't do better with their money because we exist, right? So over the last 1 to 3 years.
Coming to this regulation, like how far are we from, let's say, a food industry where, every time you eat a chocolate, they tell you what you're consuming.
Right.
It's the same for stock market as well, that, if you go into less diversified portfolio,
right,
believe whoever tells you. If they tell you that this pizza is great for you.
Right.
But the general information is still out there, right?
Right, yeah. No, it's the thing about trading, right, is that majority of the people who start getting trade, who come to the markets to trade, they come out of greed. They come with a false expectation that it's a easy place to make money, right? So a lot of them don't even spend time, this whole diversification, not going against the trend or having a stop loss. These all seems natural to someone who's studied and who spent some time around this. But this is not natural for 99% of the people. When a stock is going down, people think they need to average down. Right? A stock is at 100, it comes to 50.
Yeah.
They're like, let me buy more.
You have behavioral biases.
Yeah, right. But ideally, you should have maybe exited before it fell to 50, but definitely not buy more of it, right? As in, you don't want to be doing it.
But did you do this kind of analysis, like among the people who trade? Do you know that, do all of them think that this is going down for a reason, maybe? Stop
right.
yourself?
Yeah. It's very hard for us to analyze, as in you can't capture feelings of the customer.
I see.
The only thing we can capture is their action. And the last big incident was when S-Bank episode happened. Because S-Bank came from 400 rupees to 10 paisa or whatever, right? The stock did that journey.
Yeah.
And at every dip, people bought more. So I'm guessing you would have to assume there was some bias at play and getting people to actually keep doubling down every time it fell. Because the problem in the stock market is also that, even with IPOs, etc., right? With a lot of people tell me it listed at a good price. So the job of the company is done. For example, the stock IPO price was 100. It listed at 110. It made 10% for the IPO investors. But then it came from 110 to 60. Okay? So people are like, why are you worried about 60? It listed at 110, right? But the problem is most retail investors get sucked in the down run, right? Because in IPO, anyways, no one would have got an allotment. 10 to 20% of the issue is actually for retail, right? So all the retail would have typically come when there is a maximum noise around it, right? And so I think like I usually tell this to a lot of my friends who are going in listing. It's IPO isn't an end game. It's really the beginning of
the life cycle.
You got a new set of people on your cap table, and it's just not about getting listing gains. It's about how do you consistently create enough wealth out there, right? So it's also, I think, the job of the promoter is also to reduce volatility, right, in the stock. I think Infosys had done a phenomenal job with that, right? As in just disclosing every single thing out there, and setting the expectations right. I think more companies have to do that, and because then, because retail investors will do well when there is lesser volatility in the companies. Because there is more volatility, people buy at wrong times, sell at wrong times, and so it's there's another angle as well, that.
And how do you think in terms of the future of participation, let's say, in the stock markets? I guess you have some 1.5, 2 crore participants?
There are 10 crore Indians who have Demat accounts. There are 2.5, 3 crore Indians who have traded once a year. In that, there are probably around 50 lakh Indians who do active trading. That is, trade futures and options or day trade stocks, etc. Now, if you look at India as 150 crore population, and that seems very little, but I think India should be looked upon as there are 7 crore Indians filing income tax returns, and maybe there are 7 crore more Indians who aren't doing. So assume there is 15 crore Indians. So your target market is probably 15 crores, right? And
Right now.
And you have 2.5, 3 crore Indians participate. I mean, 2.5, and then maybe another 2.5, like 3 to 4 crores, including mutual funds. So it's not a, it's not a bad penetration number. So, I mean, of course it can become much larger, right? As in, there's so much money sitting in bank FDs and gold. And
so on average, when do you think people come into the market? There's a salary threshold that we can put some number
No, it's just
to?
greed. So people come to the market when markets are outperforming other asset classes, right? It's just that. I mean, it's.
No, but on average, there should be some number, no?
I mean, this time, in the last 2-3 years, you had a lot of 20 to 25-year-old without too much money coming in, opening accounts and trading.
Okay.
Right. So it is. This time the behavior has been very different. But otherwise, historically, if I were to look at markets, from when I was trading, it's usually a 30-plus-year-old person doing it. That means he saved enough money, and then.
It's part of your portfolio now.
Yeah, I mean, you're typically a little late to get started. I mean, generally most people in India, weren't starting early, but I think that behavior is changing. I think today, 21, 22-year-old kids, getting out of college are thinking about making money through markets.
You have any suggestions for them? Stay for the long run.
I don't know. I mean, suggestions would be, I think it would be a good idea to start with the most easiest product, which is a mutual fund, right? And because it's got a steep learning curve, right? It's not very easy to just decide, get up one day and say, I'll invest in, I don't know, some stock without knowing head or tail about how everything works. I think it's a good idea to start investing using mutual funds. Take 5 to 10% of whatever you intend to invest, and maybe dabbling in stocks directly, and give it some time before you start double down. Because otherwise, what happens is, I've seen so many people who get lucky first month of their trading, second month, and suddenly they think they've found this, like super way where they can, make tons of money very quickly. It doesn't work like that, So there are people have streaks, and what I've seen is people who are starting off who are so clueless. They tend to be, the odds of them getting lucky is higher. Then when you start becoming knowledgeable, right? Because when you become knowledgeable, you are now using.
Then it's difficult to trade.
then you're trying to use your brains, and So if you were to pick people who start trading the first 2-3 months of their trading life, the odds of them being lucky is much higher than later, because they're just being, their ignorance is actually helping them.
And what's going on in the options market? Like, India is probably one of the biggest markets there. Generally, you wouldn't want people to start trading. What makes it so popular among Indians?
Greed again. So
it's again.
Yeah, it's just that the options, you can, like, I told you that incident from 2009 when a customer, made 2 lakhs into 2 crores overnight. That kind of outcome can't happen in anything other than an option, right? So, but it's an illusion though, as in it's, because an option has a time value. It's like that lottery ticket, right? As in your lottery, you have to hit in the next lottery. As in, you can't just hold that lottery ticket forever. It's not like buying a stock and saying, it'll at some point of time you're fighting time when you're buying options. I think the reason people get sucked into option is that a small amount of money, it kind of creates an illusion that you can have a really large outcome. And it is also, I think, some of this whole social media Finfluencer agenda is also a reason. And because a lot of them have gone out there and produced content, making it seem like anyone can trade options and anyone can make money, right? So one of the reasons I am very actively, going out there and talking about how hard it is to trade options is because you want the customer to come trade with the right expectations, right? And it's important because he'll not be disappointed. Right? If he comes with the wrong expectation, he'll get disappointed. He'll not just stop trading. He'll go around 20 people and say, you know what, it's a scam or something like that.
Do they tell that though? I'm not sure.
No, I mean the younger crowd, right?
Yeah, maybe you can post it on social media, but I
mean
guess
not even social media. See, this happens, over tea, over coffee, over lunch, over a beer, right? Where you have sob stories to say, right? And then you are, kind of influencing someone. It's not just about options now, right? You're influencing that person to think about capital markets in a different way, right? And that's happened after every bull market, right? Like, I still remember 2008, 9, like everyone around me were calling me up and saying, Nithin, are you all right? And, why are you in this business of fraud? And, because...
Really? Okay.
Yeah, because there was, a lot of things that were melting down in 2009, after the whole financial crisis time, right? 2008 and 9. So it's it's...
But there's some role for regulation here?
So I think what the regulator has done till now is to firstly set the expectation, which is, we are now all asked to display what percentage of customers make money. So 9 out of 10 lose money while trading options. So at least you're setting that expectation. But the thing about us humans is that we'll somehow believe that we are that 1 out of 10 who will make money, right? So
it's 1 out of 10 chance.
Yeah, I think regulator is going after people who are producing content that are setting right expectations, that's setting unreal expectations, which is good again, right? Should there? I think this is a thing that the generally people talk about. Should there be some kind of product suitability framework? If there was a minimum net worth that was required to trade options or futures or intraday, I wouldn't have been able to start my career.
Yeah, you want those people to come out as well.
Yeah, I mean, in the sense, India is a poor country, as in you can't just, leave out a large audience just because we think it's not the right product. See, the thing is, I think about trading and business very similarly, right?
I think that's a very important point because we want to protect so much that sometimes we are blindsided.
Right.
By that, there's also some benefits which are coming out of it.
Yeah, I mean, like I said, if there was a rule like that, I wouldn't ever started my career in trading in options or trading intraday, etc. I would have probably found a job, and there would not be a company like this today, right? And the thing about trading and business, running a business, starting a business, are very similar, right? If I look at startups around me, out of every 100 startups, maybe one has actually survived over the long run. And that's really the same odds with trading as well. As in every out of 100, maybe one survives, doing well over a long period of time. So there is no difference in starting a business, in terms of just the outcomes. The problem with trading, though, is that it's just so easy to start trading that, it's just the number of people who can get impacted is much larger than the number of people who want to start building a business. Because building a business requires a lot of time and effort just to get it started. Yeah. Like if everyone could just start a business just by clicking a button, I think there would be a lot more businesses.
Just signing in.
Yeah, so it isn't easy. But I think, I don't know.
But are you thinking of some soft nudges on this side as well?
Yeah, we are. I mean, at Zerodha, we've already been doing this. I mean, even before the regulatory requirement of disclosing what percent, I mean, every single communication, if you look at any blog post of mine, we've been very actively talking about this, which is just setting the expectations right. We run some of the largest education initiatives around, on trading right and etc. Through our city. We keep trying to nudge people to say, what you should. And now with Nudges, the platform itself, our idea is that, which is, even why does a futures and option trader lose money, right? It's because he's over leveraging. Not just futures and option, even a day trader, right? Leverage is the first thing, right? Because everyone wants to be always, the whole bet sizing concept isn't there. Everyone wants to be max. If I have 1 lakh rupees, I want to take max leverage every single trade. It doesn't work. You're just one slip, away from just blowing up, right? So even for very active trading, there are a bunch of rules to follow, right? I have a friend, we were talking about it. So every, in poker, for example, every once in a while you'll go on a tilt, right? Nothing's working, right? And at that time, if there's a friend on the table, the thing what he'll say is, dude, take a break, right?
Yeah.
Just go out, spend some time and then come back, because that's really the only way to get around it, right? So can you be that person, right? As in, if someone's trading and suddenly having a bad run, can you just say, dude, take a break? Because once you're in that whole rabbit hole, once you're in that down run of just your decisions.
I guess the pressure also increases once you start losing.
And then you know how people are, right? As in, they want to make up for the losses very quickly. So you become more aggressive. You start, so it's all these behavioral biases that really affect traders. I mean, trading isn't really about the trading strategy itself. It's all about how do you manage your money, emotions. It's just that. And if there is, like usually when people come to me and they say I want to learn trading, I'll say probably go play some poker, because it'll probably at least introduce you to the whole concept of how you react under this whole emotional roller coaster of sorts.
So I'll again go back to maybe the business Zerodha and ask you, how many trades are executed on your platform, let's say, every second, every minute?
I mean, it is tens of thousands, of orders. So in India, the markets are open for a 6 hour, 15 minutes. And typically the most active the markets are the first 30 minutes and the last 30 minutes. So majority, maybe 35% of the business happens in that period. So yeah, in that concentrated period of time, there's a lot of activity in the market.
Do you have any favorite statistic which you thought it's crazy?
No, I mean, right now at Zerodha, everything seems crazy. Yesterday we were looking at our AUM growth, which is the number of the assets that our customers have in a demat account. It was 10,000 crores in 2020. It's 360,000 crores today. So, and I mean, what is mind blowing about this is, that our customers trust us. I mean, in the sense, while they don't keep those securities with us, but they still trust a platform like us to use that to keep those securities. And yeah, I'm actually quite mind blown. I would have never assumed that we would have been able to garner this much trust so quickly, because like traditional banks or also brokers, they've taken like 20, 30 years before being able to actually build that trust.
So other than being at the right point at the right time, right product mix, on the technology side, what do you think really helped Zerodha where it is today?
See, the thing is, we started off as a financial services firm, but today we think about ourselves as a technology firm. And I'm not a technologist, I'm a business guy, And so for me, I think my biggest tipping point in my life was finding Kailash, who was our CTO, and he joined us in 2013, 2014. And around him is the whole tech journey, right? Because until him, it was, we were generally on vendor products. So I think on the tech side, I think a bunch of things that we got right was, so everything at Zerodha is FOSS. It's completely free and open source. I didn't really get it when, K is a big proponent of FOSS. Every single person on our tech team has some pet hobby FOSS project by the side. And I actually think FOSS is maybe one of the truest forms of art, where you build something and just give it away for free, right? Because otherwise, there's always a commercial intent behind doing everything in life, right? So it's like, think of yourself as an artist who draws something and just puts it up for everyone to appreciate, right? Like that. So yeah, so I think this whole having a FOSS strategy has meant that, as we scale the business, the cost didn't catch up at all, right? We have no enterprise deals. There is, I'm on Linux, by the way, and they, the tech team, like the entire company is on Linux now. And so we don't even have to pay any, like Windows
or Microsoft
or Apple licenses,
Yeah.
So I thought it'd be tough to be on Linux, but I was so surprised that,
it's faster.
I mean, so I don't know if it's fast, but I'm not really missing out on anything, right? So
plus it looks cool.
No, I don't know. I don't think people, others can figure it out.
Not anymore, I guess. But 10 years ago, people who would work on Linux, it's like...
no, now you have all those skins which are which make it look like Windows anyway. So
I guess the old ones, they still use like command
prompts and all of that. Yeah. So when we 2015, when we put out Kite, which is a web app, mobile app, I think the first thing we did was, before we put out the app, the tech team, K and the tech team, I think they launched a bunch of APIs that allowed for startups to come build on top. I mean, they allowed for any platform to come build on it. So that was not just Kite web and mobile. it potentially allowed for startups to also come build on top of us. So I think in tech, I think that was a very smart thing that we did, because that allowed us to invite startups to come build on top of us. So then what it meant was our customers didn't not only got access to Zerodha's own products, but they also got access to the ecosystem of products that are being built on top of us, right? As in, then I think with tech, the most important thing was the fact that we scaled well, right? It's just ridiculous the amount of transactions that go through the platform today on a daily basis. The amount of contract notes we send. The thing about our business is everything is happening in milliseconds, right? As in, you cannot be slow. The fact that there are millions of orders being executed daily, and we have done a decent job of it, in terms of course, there's always scope for improvement, but in terms of our uptimes, in terms of everything, and so I think just the tech working at scale itself is, I think is a phenomenal job that is done by the team.
And do you think there's scope for other players to come in the market, because we have 2-3 crore people who are actively trading?
Right.
I guess if you look over 10-20 year period, it should be some
30-40
crore.
I don't know if there's a scope for another Zerodha kind of a platform, right? I mean, there are enough out there, right? I think, but there is a scope for platforms who are thinking differently, right? If it's going to be another platform which just looks and feels like us, I don't know. I mean, I don't see why
There's not much value addition.
Yeah, there is no. I mean, I think that bus is gone. So I think the next person who comes around the scene has to think of this differently, right? And that's why, through Rainmatter, we even seed that idea, saying that, we are okay to have our skin in the game. And, we invest anywhere between 2 to, I think now our check size has gone to 25-30 crores in companies, saying, we are, let's figure out what is this thing that can help Indians do better with money. And I think...
if you can tell a little bit more about Rainmatter. So this is a...
This started in 2016. When I said we launched this bunch of APIs. So the first few startups who came to us, we realized they also needed capital. And so we said, why don't you take it from us? And now we called it as Rainmatter, the Fintech fund, and then...
Is there a play on the name over here as well?
Oh, no. I mean,
not this one, okay.
No, in the sense, me and Kailash, we had gone to a Cisco cloud conference, and there was a cloud chief, he was calling himself Cloud Maker, and then I was like, oh, he's Cloud Maker, I need to be Rainmaker, and then, just in that fooling around,
okay.
the name happened. So it started, today it's a portfolio of 100 plus companies. It started as a fintech, soon extended into health. I'm passionate about, I'm saying, I think, when you talk about wealth, it just doesn't end with money in finance. Health is an important aspect of it as well. So we are also investing in companies and helping startups who are trying to make it easier for Indians to make healthier choices. Then we set up the foundation in 2020. We call it Rainmatter Foundation, and where we have started with like 1,000 crore allocation, saying that we'll help the social sector attempting for climate problems. And climate problem is a broad problem in the sense it ranges from food to education to it kind of intersects everywhere. But our framework there is we think like how for-profits can solve for some problems. Social sector can also attempt to solve some of the problems. And the reason we need a social sector is because it's really hard for a government to be solving. It's really hard to be running. I don't even know how it works, right? How can people actually run a country? Because I find it so
just
hard.
runs on its own.
Yeah,
I guess you have APIs in place, and then maybe that helps.
Yeah, so the way that we think about social sector is we get them to experiment, prototype stuff, make it work, and then go showcase to government and see if government can actually scale it. Right, and so when we started doing through the foundation, helping startups working in this space, we also realized there are for-profits in the climate space as well. So we started investing there as well. So 100 plus investments. I think we have until now allocated like 500 plus crores right now for-profit.
If you can name a few that you think are really doing well or which you really care about.
So in the fintech, the first few ones that we invested, small case. has built a thematic investing platform. Sensible, who's built a option trading platform. Streak, a backtesting platform.
So these are all part of the Rainmatter. Okay, I see.
they're all integrated at Zerodha, so it feels like you're actually looking at.
I see.
It's all Zerodha's product, but they're not. They're standalone companies, and they're doing quite well on their own. And in health, I have a sweet tooth, so some of the problems. The first problem actually was every time I fly in the airport, right? I want to eat something. I want to snack on something. I couldn't find a decent snack. In the sense which is, I don't feel guilty about eating, right? I think now in Bangalore airport there's a salad bar, but there was nothing, there was really, your chips or biscuits or whatever, right? And so we ended up investing. The first investment I think was the Whole Truth, so they make, protein bars, etc. So that is extended, we now, the way I think about health is there a way to get Indians to play sports, right? The more sports you play, automatically your outcomes, health outcomes are better. People care what they're eating. They're automatically more active. It also helps you in a better spot to be mentally, because playing a sport is probably the best way to tone down your anxiety and stress. So we are trying to help a bunch of folks who are trying to get Indians to play more sports. And in climate, the biggest one we have is investment is Akshay Kalpa. And Akshay Kalpa is actually, it's still not there in North, but it's quite popular in Bangalore now and in Chennai and Hyderabad. So it's organic milk.
Okay.
But more importantly, what they do is, kind of nudge the farmers to kind of take more sustainable practices of farming, which is, so I don't know, maybe out of context here, but generally, right, the problem with dairy is that most cows are tethered to one place through their life. The problem with that is they catch diseases quickly. And the problem with that is the farmers end up putting too much of antibiotics, which shows up in the milk. Right?
Yes.
And antibiotic resistance is right now probably one of the biggest problems for humankind. Right?
And especially coming from India.
Not just India, it's actually everywhere.
But yeah.
Yeah, because this whole problem, injecting hormones, injecting antibiotics, it's a global problem in dairy, meat industry, and so we need to create more awareness, because then you'll start questioning how you're sourcing your food, right? And so Akshay Kalpa follows more sustainable practices, but most importantly they put more money in the hands of the farmer, and they use every village they go, they try to turn one farmer into a model farmer, then try to nudge, because in a village, if one farmer is doing well, one family is doing well, others tend to copy what is working for them, right? And it's quite nice there.
So let's go back to finance, and I'll ask you about some of the financial taglines. If it's truth or hype, okay? First one is mutual fund sahi hai.
Yeah, absolutely sahi hai to get someone started investing in the markets, so.
Sabse pehle life insurance.
Term insurance. Yeah, because life is a very broad term. If it's life insurance for investment, it's a really bad choice. If it's life insurance for covering your life, which is a term insurance policy, absolutely, so.
A diamond is forever.
Scam. And the biggest fraud out there. So.
A gold is forever.
Maybe. No, I think, sure. In a world full of inflation, I think gold still seems to be something, it's a decent asset class to be in. But not, when I say gold, not jewelry. Jewelry is a scam, right? And gold, gold as a ETF.
No, but on average, it's tough to put numbers, and it depends on your situation where you are in life. Like roughly speaking, for an average Indian,
right? How much
what
gold?
Percentage of your asset can be in gold, and then?
I think for us as a family, it's maybe 10 to 15%, and it's a large allocation, because we are personally very worried about inflation and.
And how about real estate?
I get trolled for saying this, but I can't believe why real estate is so expensive in this country. So I don't think. See, the thing is, everyone needs a home for peace of mind.
We need another discussion just for that. Why it's so expensive, and looking at something which is not pleasant.
Considering the infra, and considering everything else. I had gone on a holiday to Europe, and I mean, it's just ridiculous, how much we. I mean, it's not even cities. I'm saying even, and this is a problem for the country itself, right? As in, because of the foundation, we work with a lot of people in the social sector working in the villages. So a lot of farmers have this notional valuation of their land, right? I mean, if you think your land is worth 25 lakh rupees an acre, and that is going to give you 25,000 rupees a year, will you work on the land? You will not.
You will not.
Right? You will think, okay, let me sell half an acre every year, right? As in, because it's you're going to just chill, and that's a problem. Farmers are just, and this land problem is everywhere. As in, like, the first thing that we did as a foundation was pick up a restoration project, in a place called Krishnagiri, around 60, 70 kilometers from here, and a 100-acre kind of piece of land, and this guy quoted as a price. He was trying to turn it into a villa community, and we said it was adjacent to a forest. We said, we need to stop this from happening, and and that was like our first. We wanted to kind of get hands dirty and do some execution ourselves. And then I was asking him, I was seriously questioning him. I said, dude, how does it make sense for a land here in the middle of nowhere for what you're quoting? There's nothing. There's no yield from this land. There's nothing that grows here. Like, how do you justify, right? Because at the end of the day, there has to be some, a land is like a company, right? There has to be some dividend out of that. It can't just be that everyone's going to somehow keep upping the price over a period of time without any dividend out of the piece of land. So I don't get it. I mean, everyone needs a piece of property for peace of mind, like a home to live in, right? That's a given, right? But as an investor, I'm not sure.
Okay, it's not hype or truth, but IIT IIM or not? Because I'm going somewhere else. Because I've heard you talk many times that you don't hire them.
No, it's not. The thing is not like we don't hire them. It's just that there are no IIT IIMs in this company, and the reason is, see, when we started the first many years, there was not enough money on the table, so we couldn't afford any IIT IIMs. I mean, because people come with the price tag, right? So the first few years, the culture in the business got built a certain way, right? And so by the time we could afford people, when we started talking, I mean, I'm not generalizing. You can't generalize every IIT IIM to be same way, right?
Say ISB.
Yes. Yeah, ISB as well, right? But the thing is, I think the way MBA schools work, right, is that, you get wired to think about where you want to get to life in how much time. There is all this goal set as soon as you finish your MBA, right? In 3 years, I'll be this. After 2 years, I'll be this. In 5 years, I need to be earning this much money. And I have no clue, right? When someone comes to me and says, Nithin, can I be here in this much time? I can't. I don't know. I mean, I don't know where I'll be tomorrow morning. How will I tell you where you'll be tomorrow morning? I mean, after 3 years, right? So I think that, culturally, the way we operate, and it's got nothing against IIM, but generally, I think all business schools, when kids come out of business school, they're primed in a certain way. And that we have found hard to culturally fit into.
So we have like some people, and I talk to a lot of students, and sometimes they finish the year and they say, it went so fast.
Right.
And it's amazing, we could have learned so many things. Right. But we are focused on placements. Right. So I guess it's probably some part of that.
Yeah, and also, I mean, the thing is, people are spending a lot of money to do these courses, right? I mean, they're right in a way, right? I mean, they can't just, come out of this and say, you know what, I'm okay to be in a place which says, dude, you do well, you will make some money at the end of it. I can't tell you how much, So, because that's really how we work, right? As in, at Zerodha, the way the culture has been, every day we get up, we'll do something better, and wherever we have to get to life, we'll get to, right? As in, there is no goals and destinations. And it's a way to, I mean, businesses can be built different ways, and this is also a way it can be built. And that's about it. But tomorrow, if someone comes around and says something which is...
Come to ISB.
Yeah, so nothing inside. Yeah.
So thanks so much, Nithin, for your time.
Cheers,
you're leading great initiatives.
Pleasure. Thanks.
I wish you good luck for all of them. And thank you for your time once again.
Thanks.